How do you do, ladies and gentlemen? I'm your host, Seth Julian. I'm welcoming you to today's briefing where we're going to look at the major stock indices in the United States economy. First, we start with the U.S. 500 as it's listed on our platform, the indices, and this, of course, we're looking at the MT4 trading platform. You will notice that as of approximately the middle of October, last month or so, we're looking at a daily chart here, the index has gone up quite significantly. And you'll see also that that's the same pattern not only for the S&P 500, but for the NASDAQ. Again, we look, this is a weekly chart, and we see that it's approximately from the same period, 15th of October, it's going up. And I'll give you an exact statistical amount in a moment, but I just want to establish for you the pattern that this is happening across the board in the United States, to say the least. And finally, I just want to show you the Dow, just for in the interest of thorough, US 30 monthly, tracking the same pattern. So let's take a look at the trading view, and I'll give you the exact statistics in a moment. If we take a look at, we'll go to the indices, we see that, what did I want to look at? The indices, yes. Let's take a look at the S&P. That's my favorite. That's the one I trade the most. It's the most liquid and most widely traded commodity in the world. It's a futures contract. So to give you the exact number, we're looking here from the middle of October till now of a rise of 11.4% in the S&P 500. Now, why would that be? And this is what I want to end with, and therefore let you in on what we think is likely to happen. Let's get this chart in focus because it's important. The secular trend in the S&P 500, starting at the end of December last year, all through this year has been down. And that's evident by drawing a line connecting the highs, which are declining, and the lows, which are declining, which happen to be the exact definition of the term downtrend, lower highs and lower lows, and vice versa for an uptrend. And so while this is a correction, no doubt, the secular trend continues to descend. And the reason for that is most likely, again, and we don't have, we don't interview every or even a sample of all the world's traders, but it's quite evident to us here that once inflation is pretty much recognized by the man in the street, by the woman in the street, and then months and months later the Federal Reserve decides to get in on the game and start raising interest rates to arrest inflation, prices fall. The stock market value of the 500 most widely capitalized corporations in the United States of America declines. And we said, again, just for the sake of thoroughness, by 17.3% in 11 months. It's a lot. It's not exactly a recession, but it's pretty damn close. And some of those stocks are way below recession level declines, which is about 20%. We're seeing this rebound. Now, this rebound, in our estimation, is fallacious. It's not going to last because it's based on the idea that inflation is coming down of its own weight, in the United States at least. And you see the euphoria that develops when a print like last week's print, that the CPI year on year, and the core and the non-core, we're down by, 0.3%, 0.2%. It's relatively insignificant when inflation is running at 9%. Who cares if it's 8.7, 8.9, it doesn't matter. Inflation is still running and running hot. And the U.S. and the federal funds rate was what the Federal Reserve charges the U.S. bankers for the initial cash before they lend it on to us. We don't pay 3.25%. As anybody who has a mortgage is well aware. We pay 5, 6, 7%. But that federal funds rate, as it continues to rise, will at some point arrest inflation by virtue of slowing the economy down. So we therefore anticipate this trend to stay in train and these major stock indices to continue to decline in the face of rising inflation, slowing economic activity. We saw that Meta is laying off 10,000 people. Apple, all the tech giants are starting to prepare for what they see as a major slowdown coming next year. And that makes sense to us. And so we anticipate these indices to continue down. So we're shorting. We're short the S&P 500. We're short the NASDAQ. And again, where would that point be? Oh, I don't know. If it breaks this point here, what is that, 40.87? Call it a 40.90 handle. Then I might consider, and stays above it for a day or 5, I might consider buying. But in the meantime, I'm a net seller on the S&P 500 as well as the NASDAQ and the Dow Jones for that matter as well. They're all tracing the same pattern. So ladies and gentlemen, that's going to do it for today. I'm your host, Seth Julian, wishing you all the ability to trade with confidence. Bye-bye for now.